Good morning, good morning, good morning, everybody. John and Jim here on Friday, December 27th, 8 a.m. Going to bring you some news on Sniper and what's happening in the markets, and I'll answer any questions a bit later on. So let me just share my screen here so we can get the here we go. So Friday 27th. Going to go over Sniper, presenting by myself, John, Oliver, and our resident chef, Jim Aguilera. So as usual, here's our disclaimer. Please read through that. We're not offering financial advice. We're not financial advisors. Trading, Forex, futures, indices, crypto, etc. does involve risk. Past performance is not indicative of any future results. So with that, let's jump straight into it and see where we're at now. If anyone was taking that XRP trade earlier that I called out, you can see we've been hitting this low down here quite a lot. This is going back to December 22. We did get down here as low as that, but we didn't really go down any lower. That was our pivot point here with the tweezer bottoms, double bottoms there. And since then, we've had quite a strong resistance range right along here, as you can see. So we were on a downtrend all the way through this, so it's very hard to buy these bullish moves, and we're still right now. Blue is still under red on the secondary. We're still well under red under here. But this line here, which is roughly 21,300. Remember, big round numbers are always something to look at, whatever instrument you're looking at. The big round numbers are always psychological numbers in pretty much anything you look at, NAS and Dow, especially. Gold, as you know, goes up in sections of 5. So 5, 10, 25. So we're always looking at those round numbers on gold. But a lot of these round numbers are psychological. So 21,300 on XRP. When you get up here, there's 23.5 is a range there that's been hit, a lot here and here. So a lot of these ranges are going to be around a round number. So be aware of that. Bitcoin, as you know, has been dropping off since way back here. We were up at 108,400. And it came right back down to 92 basically. And we're trading in the middle around 95. You want to get on Corinne's calls every time that she's on, because she's going through a lot of the basics now, but as she progresses more into the direction and everything, she did post a good video today about where that height might be. So you want to watch that sometime today or over the weekend. And also don't forget, if you're on the builders chat and the team chats, you got to have read chapter 1 through 3 on Think and Grow Rich. You want to do that by tomorrow's team training at 10 a.m. Mountain Time. Just an aside there. Ethereum's going to follow very much the same as gold. We have been up in bullish territory up here, but it didn't. Apart from this big move up here, then we didn't really do anything bullish at all. And now we've gone back into bearish territory here. Bearish on the primary, bearish on the secondary. Nice move, nice entry would have been right here. Oh, let's mute out David. So that would have been a nice bearish move right here off this one here. Let's go over to Let's have a little look at gold here. So we know everybody likes gold. Tony likes gold. David likes gold. Everybody likes gold, except Jim. Um, so here's gold. Let's do our range here and see where we're at. A very, very tight range. Obviously, gold at the end of the year does get very tight. You can see here, we did get some movement in here, but from the kind of 20th of December onwards, this has been in a kind of quite a range here. Um, Not really getting any higher than that. And there's a nice little range kind of right in there as well. That's what we've been traveling through. Still some good pippage here to be taken, obviously. We are in a downtrend all the way back from the middle of December. But we've been getting a bit closer. We got some higher highs, higher highs, higher highs here. This one here, we're now struggling at this level here. So not anticipating this to be broken um, until the new year. So just be careful of that. But it is a range. There's money to be made in there for sure on that range. Let's drop down to the 1 hour. Um, yeah, again, you can see been trying to break up through this 640 range, but just can't, hasn't really got the legs to do it. This is forming, the primary trend line is forming a good resistance up there. It's trying to break, trying to break, trying to break, trying to break. So, but eventually just hasn't had the legs to do it. We did get a crossover here on the secondary. This didn't even hasn't even reached up to the oversold here. Since yesterday afternoon. Um, I like to put a 50 in here. You can see it is bouncing off 50, bouncing off the 50, bouncing here. It's not reaching this overbought at all. So the pressure is still downwards. The blue is now expanding away from the red. So, that's a downtrend for sure going on there. But as we go down to the lower minutes, you'll see there's been some nice buy and sell action if you wanted to take some counter trend. 30-minute down, bounced off the overbought back here, um, which was very early this morning, about 4:30. We go down to the 15-minute here just to show you, still going down. This is still your support here. We might see a break, try and break through this, so keep an eye on that. We got up to didn't even make the 50. We'll have to see what happens here, but if it doesn't break that 50, we're going to still see downward pressure on gold for sure. Let's drop down to the 3. Same again. Make sure we got our countdown to close bar on here. We did hit it twice here. Little touch here, went up again, but we're still in sell mode here on gold for sure. In the 1 minute, there were some, little counter trend here. Yeah, wouldn't have taken anything else. All of this is, sell here. This is going back to again earlier this morning, 4:15, 4:20. You could have got a nice sell here, nice strong crash through the overbought here. You would have had to wait. That was on a green candle though, so you could have waited till that one, which I like. I like the a big strong candle to go through both of the secondary primary lines. Didn't quite touch into the lower one here. So if you wanted to be extra safe, you could have waited here when it didn't crash through here. On the oversold, did come back through here, so that could have been a reason to get out. So taking some pips there, But you see, we're trying to break the blue line all the way down here. Didn't. Bounced off the middle again on the 50% here. So you could have taken a nice little movement here. You would have got out here once it bounced up through the 50 and up to the overbought here. You would have waited all through that, all through that. It did cross there, but we're counter trend, obviously. It's no good for us. This one, again, small candles here. The angle of this drop is quite important. So when you get almost a vertical drop like this, that's obviously going to be a big, strong movement as it tends to flatten out a bit. So this is more like a 6 o'clock move. This is more like a 5 o'clock move. It's a little bit more gentle, smaller pips, lesser volume. We're between Christmas and the New Year, so a lot of brokers are still away on vacation. So sometimes we get this smaller volume going on. Right here again, this big candle, again, I like it, goes through both primaries and straight from the red zone up here, straight into the blue zone. Crashed down quite strongly right here from the overbought. So as soon as again, that was on the green candle, as soon as we got that red candle, that would be a good entry, and you could have taken that all the way down here. Once you got this green candle here and we broke through the 50% down here on the stochastic, you'd have had finger on button. Certainly, definitely when you crossed over the blue and hit the red here, wouldn't be that great. Definitely would have been out there, but I probably would have been out around here. Maybe one of these two. So got some nice pips there. This one crashing down through the overbought here again on the green candle. You'd have had to wait for the red, but for me it was too high up. Hasn't really broken the blue yet. Small volume. It's leading up to market open at 720. So, we're not going to be in that anyway. Too risky. Coming down here, here's our market open. Doesn't always affect gold like it does the indices, obviously, but we did get a big push candle down there. But, we wouldn't have been trading any of this. Coming out of market open, we're on the 1 minute. These are all 1 minute candles. Wouldn't have been trading any of this. Counter trend here. Maybe. Again, I probably wouldn't have taken this. But again, here we got a nice bounced off the 50 perfectly right here. Carried on down, crossover here, back into our zone. Our Bollinger Bands are expanding. Primary trend line is up here. Secondary trend lines have crossed. Blue is pulling away from red right there. Bollinger Bands are expanding right there. So, and now, these primary trend lines are pointing downwards, kind of a 4 o'clock angle, same as a primary trend line. So again, this indicates us going down here, but we got to see what happens on this support line here to see whether this holds, whether we're going to go down and test it again, or whether we're getting away from that. So that's what's happening with gold. We would have to keep an eye on this. Is it going to bounce off 50? Is it going to go all the way up to overbought and then swing back and crash back down again? So, there is some pips to be taken from here down to this level here. So, keep an eye on that. This is a strong move here. There's no news. Sorry, I checked news earlier. There was red folder news on at 6:30 an hour before open. But there's nothing else going on. There's a few there was a few medium ones, some other ones coming up. This might have an effect on gold at 1:30 if you're still trading this afternoon. But apart from that, it's going to be pretty quiet today. It's a Friday and we are between holidays as well. So looks like this is trying to do a little bit of a breakthrough here, but we are well over bought here. So we are anticipating that to come crashing down through here. And if it does, we might be in a buy situation right here to get a nice big candle pushed down over these two secondary trend lines. That'll be a nice thing to look at. Got a red candle. Blue is below red at the moment, so no real entry there that I would consider taking yet, but it is setting up for one. Does anyone trade silver or platinum here? If not, I won't bother looking at it. Let's go back to gold and see where we're at. Well, gold is still get rid of that. Clicked on the wrong one. Stick it back about there. Yeah, bouncing off that middle again. So now hopefully we're going to see it's got to stay below that 50 and carry on down. And then we might be looking at a few pips there. But, this strong resistance line here doesn't mean, means there's not much pips in this. Maybe 3, which is on gold is 30. I mean, you could still make good money just running it from here down to here. But we got a lot of wicks, top and bottom here, so we're getting into the indecision here. We have to wait this one out, guys, to see what's happening. So having said that, everything going quiet, I'm going to shoot over to Jim if he's ready to go through NAS and US 30 to see what's going to be going on there. Because we have to wait a little bit on gold here. We could do, oh, there he is, he's back. The other thing that we could do, we could always look at, things like Euro, JPY, some of the Forex pairs here. We are on this one, on Euro JPY, we've been on a buy trend all the way up here. Lots of nice buy opportunities. One right here, re-entry here. Definitely a nice entry here. This was a heads up that we were changing and it was going up from there all the way up here. Safer entry for me would be a little bit here, even though we're already in the overbought though. You could have actually popped in here, but again, all overbought, but trend has been strong on Euro JPY. Definitely would have got a nice big move here. You could have got a re-entry here when we popped up through the oversold on EJ. Nothing here, counter trend. Definitely an entry here on EJ. And that would have given you a nice amount of pips. I would have got out on this when it popped off on the overbought, would have given me a heads up. But on this candle, kind of going into the white, not a bearish engulfing, but close enough for me. It did close below that bullish candle. So that would have been a nice exit right there, and you would have got all those pips from there to there. Entry around here. And this would have been could have been very tight up to about here. I mean, your 1 to 2 easily would have hit here. If you'd have been trailing your stop loss after that, you would have been running it all the way up here. You might have got, almost 1 to 4 here. Your trailing stop loss probably would have been around. Probably would have been around there once it shot up. Oh, sorry. Leave that there. Once it shot up here, Your trailing stop loss would have been up there, well in profit. Never hit any of that, never hit the trailing stop loss all the way here. So you might even have taken that up a little bit higher and got you 1 to 4, definitely. Maybe even got up to 1 to 5 here because your stop loss probably. Your stop loss, you might have brought it up a little bit higher. You might have brought this up to down about here. Still wouldn't have been here. If you brought it really tight up to there somewhere, then you would have got stopped out on this candle. But by that time, you probably would have got out when you went in there, these big wicks into the white, or when it crossed down into the white zone here. When we bounced off here, for sure, on that green candle. As soon as it started coming down on the red candle, you would have manually got out there and maybe you only got 1 to, maybe you ended up with 1 to 3, um, something like that. Maybe 1 to 4 if you were lucky. So you would have got some nice pips on that. All right, I'm going to hand it over to Jim now so he can walk us through the indices and to see where we could have picked up some nice pips there, and whether we got some nice pips coming down the road. Let me just make Jim co-host here so he can take over. And there we go, Jim. Take it away, my friend.
Thanks, John. Some great insight there on crypto and gold that I don't touch. Okay, so as John was saying, lots of moves this morning. And if you happen to be trading Tokyo and London, I mean, you would have had a lot of opportunities. So we're looking at US 30, and we had market open right here at 1430 on our sniper chart. But before that, we had this big drop that gave us a few opportunities. Okay. And if you're ever confused about whether you're in consolidation or not, being in the blue bands of the Bollinger Bands here, when you're below the primary trend line, and this is a good indication that we're in a decent trend. And then obviously here we flatten out and then we get back into that trend. Okay. So it's a good indication, and this lasted like 15 minutes here. So you could have been on the charts for an hour, and you would have been somewhere in this time. If you would have seen a trend here and then another trend here. And obviously we've talked about this before, the trend that I like to, or the entries that I like to look for are when we are, if we're below the primary trend line and it's red, then we're looking for sells. And then when are we going to take a sell is when we have a cross up here on the stochastic and then a cross back down, right? So on this particular cross up and cross down, might have been a little unclear if it happened on this candle or this candle. Either one of them would have got you in the trade. Okay. And so if we got in on this bigger candle and put, so if we put stops above the structure there, it's pretty tight. I probably give it a little more room. I'd have been happy with 15. And then if we were shooting for a 1 to 2, obviously we would have got that here. Okay. And then as this started to break down and then had a pullback, if we stayed in this and didn't get a trailing stop taken out, I probably would have moved my stop here behind this pullback. and then waited to see if it was going to go down to hit my TP. Okay. And then we got another break above here on the overbought line, and then another breakdown on this red candle here. Now this trade was not as smooth as the previous one, because if we, if I would have probably put my stop here about 20, and been shooting for 40. Okay. And we immediately go into profit, and then we get to this consolidation area, and then eventually we do break down. So when you're in a trade like this, that you're either in drawdown or you're in and out of profit or something like that, you don't always have to hold the trade. Now in this case it would have worked out, but if you see something that you don't like, and I don't really see it in this trade, but I'm just going to use this as an example to tell you, you don't have to marry your trade, right? So, and there's a fine line, because if you're confident in your entry and you followed all the rules and everything's telling you that your trade is, has a proper entry, then, have confidence in that and stick with that. But if you do notice something, or the chart gives you new information after you're in a trade and you don't like it, you don't have to wait there until you hit whatever stop loss you've put in, right? I mean, you can exit your trade with a little bit of profit. You can exit with a little bit of a loss. And so, you don't have to just stick with the stop loss. So in a case like this, obviously somewhere in the middle here, we've probably got the bands, these secondary trend lines, crossed back up, or at the very least, they're right on top of each other. And we start to get into the upper Bollinger Bands here, the red ones. And so it could have been, an okay reason to get out of your trade early, because you never know once you get into this consolidation which way it's going to break out. Okay. This actually broke up, but not far enough to where it would have hit a stop that I would have used. Okay. And oftentimes in consolidation, we get a breakout in one direction before we get the real breakout, which was down here. And typically when you're in consolidation, it's going to continue in the direction that it was originally before we got into consolidation. So obviously we've been going down all the way since up here, right? And then, we were going down right before, and then we got into this consolidation. And then, this is what we call a little bit of expansion, where price is starting to move out of this tight consolidation. And that little expansion there isn't necessarily the new direction that we're going to go in. It's just showing you now that there's volume now coming back into the market. And anybody who had, really tight stops above here, that would have taken them out. And then we get the move here. Okay. So if you would have gotten out of this because of the consolidation, that's okay. But also, you could have held, because, we're below the primary trend line. And so we're only interested in sells, and we have a stop up here. And the reason we have a stop is because, we're accepting the risk. We've accepted the amount of risk before we even entered the trade, and we're okay with it, right? We're not going to win every trade. So you could have held this, and then you do finally get a nicer move down, okay? And then we get, another opportunity right here. We get a break up, and then this candle here breaks below the stochastic here, and we get another opportunity here. And then this one goes obviously plenty, regardless of what kind of TP or trailing you were doing. You had a lot of opportunity there. Now we had market open right here on this wick, and we went just wick down and then shot up. Now, something interesting here is that when you see the market just do this, it's kind of like a V bottom. There's a lot of reasons why the market will come back to this area, okay? Because There's a lot of imbalance here. Okay. And so, the market didn't cleanly work its way up from here and, have a double bottom, triple bottom, something like that. It just really just made a strong move down and a strong move up. So for me, I would have I would have been thinking, and I actually was, I took this trade down, but I would have been thinking that price is not done being down here. That it's very likely that it's going to come back up. And this was quite a big move up. We just look at it from the bottom to the top here. We were almost 200 pips. Okay. And so I was looking for an opportunity to come back down to this area. And I had this marked up, which we didn't actually come get to. But one interesting thing is that, I like to remind you guys that price often respects this primary trend line. And so as you can see here, it kind of just broke through and broke down. So in this particular example, we didn't really see a whole lot of respect for the line here, but it does happen often enough that it's something that you should be aware of. So, if you happen to be in a buy heading up here, then you want to start protecting your trade, or even maybe just taking your profit when you get to these primary trend lines, because you never know how hard it's going to reverse off of there. But let me give you an example here. Okay, so we had a double top here, and then we had a drop back down. And if we just go to the 5-minute, look where we double topped at, right at the primary trend line on the 5-minute. Okay, so I always like to flip around on the various time frames to see where we are in relation to the primary trend line. Okay, if I'm going to sell, let's just say I want to know if I'm potentially running into any of these EMAs on another time frame. So let's just say like I mean, we're below. I don't really use the 2-hour, but we're below on all of them except probably the daily. So, the daily is way down here, so it's not going to come. But, if we started to trade down here and we started to get to this area, which is quite a bit away, a couple thousand pips. But, this would be an area that I would start to maybe not take sells into, because this is obviously a very, very strong potential support line on the daily. Okay. But on the all the other time frames were below. So I would be interested in checking those lines when we're moving up. Okay. So just for instance, here on the 15, if we started to come up here and we got to this area on the 15, I would be, aware of that, of where that primary trend line is, and potentially, not taking buys right into it, or potentially looking for confirmations to take a sell going away from this line, right? And then, so the 5 we already showed you, we already rejected it there. And then I have some other areas marked up here where I had gone to a higher time frame and looked to the left here to see where can this chart go? How far do I think, this thing can go, or where can it reject from? So I looked those up here. Obviously we have a low here by this wick, but the part of that wick itself, if we go down to the 5-minute, is what we call an order block, which is a place where price went down to, or the last candle on the 5-minute that went down before we had an up. So that's often an area where we can see reversals. And so I'm definitely not interested in taking sells right into that area when I'm on my 1-minute chart scalping. Okay. And then we had another area here, which was also a low here, coupled by a 5-minute order block. Okay. And then if price happens to get through these, then I want to see, what are my other areas of interest. Okay. And then if price goes up, then I want to know where I can potentially take, a trade to, or where it might stall out or reverse. And so we had a little bit of resistance here. And so we didn't quite get there earlier this morning when we had that move up. So it's still a potential area where price could come to and then go back down. So I just want to have those areas on my chart so that, I'm aware of them when I'm on the 1 minute. Okay. Now, we did get this double top here. And one other thing I like to do is, I like to have the an RSI indicator, and we can't put that on here, right? But I'm always looking at my own trading view and marking up my own trading view. And so if we go over here to my trading view, I have the RSI down here. And as you can see, we had a double top here. And one of the good things is this is a momentum indicator, the RSI, okay? And one of the things you could see here at the top here is that we had a double top. So this was flat, and pretty horizontal, right? But down here, we had what we call divergence, which means when the RSI does not match what the chart is doing, then we consider that divergence, and it could be an early indication that we are going to change direction, or at the very least, have a pullback. I'm going to go back and I'm going to show you how this candle here was a confirmed entry on Sniper, but why I didn't take it is because I happened to glance here and we were sharply moving down here, okay? And then plus we had the 5-minute primary trend line up here, okay? So see how I say this was above the primary trend line. We got oversold here, and this would have been a potential entry. So we had the 5-minute primary trend line up here. We have this zone that I believe was a potential rejection zone, really close. And then we had the RSI telling us that momentum was moving down. So for me, I didn't like this. What I did like was the fact that it was a double top, a rejection of the primary trend line, and that we had this area down here that I thought price wanted to come back to. And so for me, this was a sell opportunity. Okay. Now, regarding that primary entry that I like to use, so we had an entry here with this breakdown, okay? And then as you can see here, it's a very, very small pullback. 50 pip stop. Would have had to use half my lot size. And then 100 pip TP. So even though my lot size would have been half, I'm getting double the pips I normally shoot for. And so either, I still hit a percentage goal for my day by doing that, even though, you have to lower your lot size, but you're going for more pips. Okay. And then so as you can see, that entry worked out quite well. And then we got another break above here, and then another break below here. We wicked off the red EMA, which is a good indication. Okay. And we have a long wick here, which is a good indication. And so this would have been another potential entry at the close of that candle when this broke down. Okay. And then once again, you need to use a big stop for this particular. Now, obviously, if you used a small stop, the trade still would have won. But when there's a lot of volatility in the market and you got wicks that are this big, you're going to potentially have a lot of movement, and so having a tight stop could just be a recipe for taking a loss. So you want to have a stop that kind of matches the structure of the market and the volatility of the market right now. Okay. And so that's why I would have used a big stop and used a big TP, because the same thing goes for the large TP. Is if I'm getting this much volatility for a potential stop loss, then I can also expect that if the trade goes my way, that a big TP is not out of the question, right? So if I would have used 100 pip TP, it would have been before my zone that I drew here, and it would have been enough to give me a 1 to 2, and then obviously it would have hit in less than 10 minutes. Okay. Now, what we're getting now is we got this potential entry here, right? We got a pullback, and then we got um, a cross back down here, okay? But we're coming out of this zone that I've already identified previously, and we're, you know, and we got a very, very, very strong, I mean, this is probably a 50 pip candle, actually 75, 80 pip candle. We're getting a very strong move out of this area. So I'm no longer interested in taking trades this close to the area, right? Now I might get another sell later, but I'd be looking for this to pull back and then, you know, give me more room down here to potentially get into another sell. Because right now I'm seeing that my analysis kind of panned out here, and that I'm getting a really big reversal out of this area. And so even though this technically passes the entry rule that I like to use, I also like to identify reasons to stay out of trades, right? So up here, I identified reasons to stay out of this buy and avoided a loss. And down here, I'm identifying why I wouldn't get into this sell, okay? Now this may come down, and if it does, that's great. I just don't love it. I don't love that it's here, you know, near this zone, and that we had this big 70, 80 pip candle, okay? So I'm more interested in having a bigger pullback and then giving me more reasons to start coming back down. Now, we're going to jump over to NAS here. NAS moved a lot cleaner this morning, okay? So we had market open right here. And before that, you know, we had multiple, you know, good entries. You can just, I don't even have to draw these up. You can just tell here when we had a break up here on the oversold on the stochastic, and then we had a breakdown around here, kind of hovered in and out of profit, and then, you know, went well into profit, okay? And then we had another one here. Now this one, it panned out, but you know, I don't like to take trade. I'm okay taking trades in the white area here where price is in the white, but I really don't like taking trades that are, you know, on the opposite side of the Bollinger Band here. But if you did, you get the break up and the breakdown on this red candle, and it would have been profitable. Okay, we got another one right here. Would have been your entry right here, and it would have gone into profit before going back to entry and then continuing down. Okay, so once market open here, you know, I try to identify some levels down here. I didn't have my first one until down here. I identified some levels above in case this wanted to come back up. And then I'm looking for the entry, right? So we get a potential entry right here. And this would have most likely been a loss, depending on what kind of stop that you use. Because if you're just, you know, going at the structure here, then you would have been stopped out, right? And for myself, I mean, I could have put potentially a stop behind this red EMA, but in all honesty, I probably wouldn't have. I didn't take this trade, but the way that I use my stops, I probably would have got taken out. But it gives you another trade. Breaks back up, it breaks back down, right? So I didn't really see a reason. Obviously, we have a little bit of support here, but looking left, there wasn't another reason to confirm this support. And every time price goes to an area and pulls back, technically that is support, but it's not a strong support, right? When you get an area that's tested more than once, you know, twice, then, or you get a very big reversal from an area, that would constitute, in my eyes, a strong support. So for me, this wouldn't be a very strong support, and it wouldn't keep me out of a potential trade down there. It probably would make me trail my stop just to make sure that it doesn't become an established strong support. But if we would have got in here, then we would have got back everything we lost on that entry and then some. Okay. So if things are confirmed for you and things line up and you take a loss, that's okay. The strategy is not 100% foolproof, and there is no one strategy that's 100% foolproof, okay? And you can't be afraid to follow what the indicator is telling you and take another trade because you lost one, okay? So this would have potentially gotten you back everything, all right? And we had another pullback here that didn't quite cross, okay? So if we're just following the letter of the law, I mean, it comes really close here. And obviously there's other ways to get in and there's other strategies and John has other ways that he likes to get in. But I like to, teach people that are starting out, one entry, because if you can wait for that entry and you can be disciplined and patient, then eventually, you can successfully add and learn how to add other types of entries. But if you can't learn patience, then you're probably not going to make it in trading. And it's okay if you don't have patience right now. Just keep going and keep working on it. Doesn't mean that you're not going to be a good trader. It just means that you're not going to see consistent success over a long period of time until you do learn how to develop that patience. Okay, so waiting for this one type of entry is developing patience, right? And that's why I like to look at two pairs, um, because sometimes one of them is going to give it to us sooner than the other. And so that gives us, a couple chances to get an entry while we have a certain amount of limited time on our chart. Okay. Some of us, aren't retired or, work from home or do whatever, and we don't have 3, 4, 5 hours to be on the charts. So if you have like an hour or 45 minutes or an hour and a half or something like that, and you're looking at, a couple pairs, then you're going to see potentially more opportunities between the two, right? And so that's why I use NAS 100 and US 30, because between the two of them, I typically can see 1 or 2 or 3 or 4 setups in an hour. Okay. So this gave it to us. This one here, I mean, it worked out. Didn't quite get to where I like it to. Okay. And then here we got it again. Okay. So obviously this was a good trade here, depending on your entry, either this candle or this candle. I mean, well over 50 pips if you just took it right to the bottom there. And then, so now we got a double bottom. And if I go back to my chart here, you can see here the divergence is we have pretty much equal lows here. So we have a horizontal line if we were to draw it. But what do we have here on the indicator? We have a big divergence. And divergence, right? The meaning of that word means that, different. And so usually, if you were to see something that was considered not divergent, it's called convergent. So you would have saw a double bottom here too, or at least very close to it, right? But this is extreme divergence, right? Where we have a flat here and a big angle up here. So to me, this is an indication when I'm looking at my chart here that I'm not super keen on getting into another sell down here. I'm going to wait for this to pull back and see if I potentially have a reason to take a buy or to get enough distance back here that I'm interested in taking sells down here. Okay, now that this kind of pullback is done. Okay. So just jump back here just to show you. You guys can add this to your trading view chart if you want. You can just go up here and type, RSI, and then just select that one. And then by default, it's the same settings as mine as far as the number, but I just have my colors a little different just for myself. Okay. But I'm talking about divergence, and I just want to, find something where there is no divergence, where it's convergent, just so you guys can understand. Okay, so right here, we have uh, these highs, and there's a slight down move to these highs. And then down here, there's also a down, okay? Not exactly the same angle, but they're both down, right? So there is no divergence here. This is considered convergence, okay? And you don't have to have exact tops or exact bottoms in order to start to identify whether there's divergence or not, okay? So like right here, we have a slight down on these bottoms. They're not equal bottoms. This one broke a little lower. Okay, but up here we got complete opposite. These are going up, right? So if you're keeping an eye on this, and guys, you don't have to do this, all right? What I try to teach is, just follow the indicator, follow the entries, take the trades. You will grow your account over time if you take the right entries. Now, what I like to add on to that is always look for reasons why the trade won't work and avoid some of those trades that will be losers, and then your account will grow even more, okay? But just with the sniper indicator, just with the entry that I teach you, or with whatever John teaches you, you pick what your trade strategy is and what your entry reasons are. You can back test them to confirm that they work more times than they don't, and you will grow your account. Now, you can add other things to help you avoid some of those losses, which will help you grow your account further. And this is just one of those things. Okay. If you're brand new and this looks confusing, don't worry about it. Avoid it. Come back 6 months from now and try to, add this to your repertoire of things. Okay. But anyway, here we have an angle down and an angle up here, which means I am not looking for sells here. And if I am looking for sells, I'm going to be really tight with my stop, and I'm going to trail it because there's a good possibility that price can have a pullback when we have divergence like this. All right. So that's it for me.
Excellent, excellent, excellent. Great, great advice, great trading there, Jim. I appreciate that. Moving forward, guys, we're going to be working on kind of an advanced version of the sniper strategy. We're using sniper right now because that's available on the Jifu platform. But Jifu is bringing out a whole bunch of a whole new platform, a whole new back office, moving everything over to a much better, stronger, more robust system. And we'll be working on adding these things into to the sniper so that it becomes easier for you to look at. One of the RSIs that I've been looking at, it automatically puts a divergence in for you. So bearish or bullish divergence. Again, it's not foolproof, but for those who don't know how to do divergence or are a little bit scared about looking at that, there are some RSIs that put that in for you, and I've been looking at some of those, and I'll be discussing with Jim certain things that we want to add into this strategy that will make it more robust. One of the things that Jifu has said is that on the new platform, we'll be able to have several overlays that we can pick and choose from. So what that means is you'll be able to have a very simplified version of Sniper, let's say as it is today. And then as you get more competent using those indicators that Jim and I are training you on, and you get comfortable taking those trades and your success rate starts going up, you can start adding overlay number one on there. And that might have, and I'm just by way of example, we haven't discussed this yet, but overlay one may have PSARs on it and Fibonacci EMAs, for instance. Overlay two might have the RSI and divergence on it. Overlay three may have, Asian range and London range highs and lows added onto it. So there'd be things like that that we're working on. Nothing set in stone. That's just by way of example. But the key to this, the real key that you must remember is you've got to get good at each little area first. So don't be sitting there thinking, oh, I can't trade if I don't know divergence. I can't trade without an RSI. I can't trade without, PSARs or whatever. That's nonsense, because you've got to get competent in trading what you can see already. Sniper is a fantastic, fantastic tool to use, but make sure you use it properly and make sure you become an expert at each single thing, an expert on the primary, an expert on the secondary trend lines, an expert on the stochastic, an expert on what the angle of the lines look like, what the candles mean. I dropped a link to the Candlestick Bible in the chat last session. Go and download that book so you know what these candles mean. So when you see the double bottoms, when you see the long wicks, when you see a doji candle, a morning star, an evening star, bearish or bullish engulfing, that you understand what that means, because you can't put that on a scanner. Okay, you need to know that as basic information. There's lots of training on these subjects inside Jifu as well, in the Jifu universities and the Forex academies, on Manicue's recorded sessions. But get that Candlestick Bible. Make sure you know what those are. Make sure you know what the patterns are. Make sure you understand what head and shoulders are, what a teacup is. Understand these things, flags, banners. Understand what that means, because that's going to help you on your trading journey. And when you combine it with the scanners that we already have here, Sniper Scanner is a great scanner. Just make sure you learn every single little bit. Every candle on there is telling you a story, and you better know how to read that story. It's like being given a book in Chinese. If you don't know Chinese, you're not going to understand the book. And trading is like that. There's a language to trading. There's a candle language. There's an indicator language. There's languages involved in this. So you need to be able to understand that language. So you got to do that in your own time as well. All the tools are there. I told you where they all are. Go and look at those. Just commit to learning. If you just commit to 10, 20, 30 minutes every day, every other day, at the weekend, to learning a new part, opening a new chapter in the Candlestick Bible, learning what those patterns look like and how to identify them, it will make you a much better trader. We're almost out of time here. I'm going to stop the recording.